we retire our premium to zero, and this is less, so that this amount will become to face value at the end of the maturity. In case of the discount, the discount is added here so that it becomes to the equal to the face value. Okay, so now let's talk about the entries like that. Let's talk about the illustration. So what would be the interest expense recorded on first 6 months, which is July 1st? The expense going to be what we have, because we will pay 4500, right? So 4500 we will pay that. How we going to retire that one? So we say that interest expense, which is 4164, premium, which is 336, to cash, which is 4500. If you see, the entry is balanced, right? Debit is equal to credit, right? So the graphical representation is that interest payments are same, but interest expense start decreasing, and bond is like that. We receive more money, and eventually it has to come down to the bond value must be equal to the face value at the end of maturity. So question is, why there is 10 here? These are not years, these are periods. So in 1 year there are 2 periods, right? So that's why if you ask me the year, so in year 2 periods, write this, right? Okay, so we have covered the bonds issued at premium. We also talk about its illustration and entries. And now let's start our final topic, which is accounting for stockholders' equity. So our first learning objective is explain the features of the corporations. And remember, the stockholder equity is the last item on accounting equation. We know that assets is equal to liabilities plus owners equity. Sorry about my writing, it's really terrible right now. So owners equity, right? So we have covered current liabilities, we have covered long-term liabilities, and now our final topic is about owners equity. So let's explore that. Okay, regarding the features of corporations, so I'm not going to spend more time here because you already have studied extensively the features of corporation, how it is set up. So we have its advantages and disadvantages. So advantages are you can raise capital, it has continuous life, ease of transferring ownership, limited liability of stockholders. Disadvantages, separation of ownership and the management. We do have agency problem here because company belongs to shareholders and run by the management. So management wants to, their goals are different than the shareholder equity. They want to increase their own remuneration, their own salaries and compensation. So sometimes they may make the decisions that are not suitable for shareholders equity because shareholder want more wealth. So we call this agency problem. We do have double taxation because when company earns profit, company is treated as a separate entity, it is taxed, and when the company distributed its profit to owners and it is considered as personal income of the owners, then owners are also taxed. Plus we have stricter regulations of the corporation than the other form of business like sole proprietorship and the partnership. So in public corporation or in corporation, the government regulations are very strict. So regarding organizing a corporation, so in that the organizers, the corporate organizers, they obtain charter from the state, and chartered include authorization to issue shares of the stock. So you have seen in some balance sheet or in one of the questions that we done in our long-term liability, in which there is a word we talked over there, that company has authorized bond issue, for example 5 million, but they issued 3 million or 300,000. So authorization means it is the maximum number of shares or the bonds that company can issue according to its charter. Okay, beyond that, company needs again to revisit to its charter and go for renewal of the charter. Okay, we have now increased the limit, so it depends on company charter. Company charter is like company, the reason of company existence, why it is being set up. Okay, so incorporators, they pay fees for the government, they sign charter, they file necessary documents with the state, and of course they will be abiding by the country's law as well. Okay,
So authority structure is that the shareholder elects the board of directors, directors elect the CEOs and the presidents, right? So the COO also lead the vice presidents of sale, marketing, financial and other human resource, and then who basically runs that treasury and controller. And among down structure there are like supervisors, workers who run the factory, right? So this is the complete structure of how the the management or authority structure of corporate world works. So what are the rights of the stockholders? Voting rights, which means right to vote on the matter that come before the shareholders, that whether we have to expand in a new business or not, whether we have to sell this segment, it's not making profit, it's like that. How much is the dividend, we should announce. They have right to receive that one, and right to participate in dividend policy as well. And then liquidation, they have received the right that if company is not going well, they can pass the resolution in the annual general meeting, and they can say that okay, we are going to sell our company, and we call this liquidation. Or they can demand from the court that the management is not doing good, we want this company to be liquidated. And the preemptive right, which means right to maintain one's proportionate ownership in the corporation. So it means if you own 1% of the total share of the company, you own 1% of the company. So your decision making in the company is 1% as well. So equity, they are called paid in capital. So don't worry about this the word, just focus on this one, paid in capital. And why there is a need, we call this paid in, because when the company it's set up, they mention over there that we are maximum, we're going to be raising funds to $1 billion. If company needs shares for more than $1 billion, they cannot. Why? Because their